We've got the Dow Jones Industrials now at cycle lows, or certainly today lows, down about 582 points. I'm not giving you a sort of a Fox alert here. This has not been a friendly month so far. That is the month of April for stocks, with the Dow down in excess of 3% going into today. The S&P at better than 6%. NASDAQ down 11%. In fact, looking at the NASDAQ, it's taking on the chin today, even though interest rates actually have been coming down a little bit here. The bigger story is just the vulnerability of technology stocks. That average is down more than 22% from its highs, which is more than the definition of a bear market when you're about 20% at a minimum from those highs. Let's get the read on what's going on here, because this isn't true to form. In other words, responding to higher interest rates and selling off on that, particularly when it comes to NASDAQ and technology names. Jared Levy here, Delancey Strategies President, Dave Maney, Deep News Chairman. Dave, begin with you. I know we're going to get some two biggies after the bell today reporting their earnings, and that will include Microsoft and Alphabet, parent of Google. But it seems that no matter how well these guys do in their quarterly reports, and many have done quite well, thank you, it's not enough to save the day for them. So what's going on?
Large injection of uncertainty, which markets hate. We've gone from a world that felt like a stable economic basis, relatively stable political order, to one in which it's very hard to understand what's coming next. And when you look back, as I was this morning, looking back at what conditions we faced 40 years ago. We all keep saying this is the highest inflation rate in 40 years, but we sort of rarely go back and dig into what the overall conditions looked like under when Ronald Reagan became president. They were awful. The prime rates were pushing 21%, and the inflation rates were pushing 14%. And so, in effect, I think markets are looking right now and saying, we're not exactly sure where this ends, and we're not exactly sure how these wild cards will play out against each other. And as a result, discount rates get higher and stock prices drop.
If there's something more to it than just a connection with higher rates, Jared, that's one thing. That's not playing out today. It was not playing out of late. So this is more than a rate story, isn't it? What do you make of it? For technology
stocks. I definitely think it's more of a rate story. Good to see you, Neil. I think the key here is, first of all, what's the consumer story? You've got a lot of conflicting. Again, there's that we don't know what's going on. You've got conflicting information from a wage standpoint, right? Some interesting data, though, I've been noticing. So consumers, their average time at their job has shrunk to 2 years from about 4 years not so long ago. And actually, they're getting paid more. The trajectory that we're trying to figure out now, and the reason why we're struggling to go into these growth names, right, that are getting pummeled here, is because it's like, okay, consumers doing good right now, but how quickly do rates rise? And then will that consumer be able to spend? Will they reemerge, continue to emerge, continue to spend and hold up profits? And again, it's a lot of murky outlooks from a lot of companies out there. There's been several reports today where they beat. UPS being a great example, beat. Guidance was good. Stock gets hammered because it just wasn't as good. There was a little if there, and that little if was just enough to spook investors. So really, it's a risk-off mentality. A lot of it, I think, is undue fear, Neil, and that's going to, again, just going to take a reset in the way that we think.
I'm wondering, too, taking a look at Tesla stock, gentlemen, I'm going to explore this a little bit in more detail with Kelly O'Grady in Los Angeles, but the stock is down close to 10%. That is post the Twitter deal that Elon Musk announced. I'm wondering if that's because, 20-plus billion of that is coming out of his Tesla hide here. What do you think?
I don't know that that's it per se, Neil. As with so many things in the market, Tesla's stock was kind of priced for perfection for many years going forward. And I think that while there may be fears of distraction or the public Elon overwhelms the private managerial one, I think the fact is that there is this climate now that sort of says, just exactly as Jared just said, that kind of says, wait a second, numerous factors are suddenly murky and unclear. And if I can't imagine that scenario of executional perfection at my corporation, then suddenly that pricing that I assign to the stock is not right.
Yeah, guys, hang on to that thought here, too, because I do want to bring Kelly O'Grady in the latest here. Kelly, the fact of the matter is, and you've been reporting this way ahead of everybody on it, that when all is said and done, Elon Musk is pledging about a third of his Tesla shares, even through a margin loan, to make this happen. Now, that doesn't affect those shares, even as collateral, but it could give, Tesla shareholders or potential shareholders pause, right?
Absolutely. I mean, you don't really know what's going on with the stock, how that's going to affect it. And I think it also makes us concerned, or shareholders concerned, that we could have him split his focus. This fight is just beginning, Neil, and he's going to have to deal with a lot of pushback with everything that's going on with Twitter that could shift his focus from Tesla.
So let's get a sense of what, if anything, we know he plans to do. I guess his technical control of the company is some months away. Do we know what he'll be doing in the interim?
Yes. So, I mean, he faces a war looming inside and outside the company. The platform, as you said, has about 6 months until until he takes over. The company held an all-hands meeting for panicked employees. Twitter was so worried about rogue employees making changes to the platform that they locked down that product. But what he's going to want to do is look at the algorithm. He's going to want to make that open source. He's going to want to bring in that edit button. And so I really think that we're going to see much more of a town square versus, just that black box that I think everyone's been so frustrated with.
Do you get any sense when you talk to workers there, Kelly, I guess not enthusiastic for the most part about Musk coming in, that every one of them, or presumably if they had shares in the company, are going to get something out of this, that a good many of them will take the money and leave the company. And then the question becomes, is that such a bad thing if they do, if new talent comes in to sort of rejigger a sort of new Twitter? What are you hearing?
Yes, absolutely. I do think you're going to see a lot of folks take the money and run. You have so many employees posting on Twitter that they feel like this is going to be an unsafe work environment for them. I mean, certainly Elon has faced criticism at Tesla for having issues within that work environment. But really, it makes me question, okay, so you have all of these employees with the experience of the product. If they were to leave, how is Elon going to now come in? Now this becomes about execution. I mean, Neil, so many takeovers fail, right? I mean, most M&A transactions fail because you have to actually create that vision. But as you said, I'm sure he's going to have no dearth of people wanting to come in and be a part of this new order he's creating. So this could actually, be good for those Twitter employees that don't want to be there. And then Elon will be able to bring in folks that could help him create this new town square.
Yeah, this new sort of DNA of the company. Kelly O'Grady, thank you for that. Back to Jared Levy and Dave Maney. Jared, what do you make of that? Normally, an acquirer company wants to keep the people there because you want to maintain their important role in the company. But if you've criticized what they've created, or that they're hopelessly biased, or that they're hopelessly caught in the past, then it might be deemed a welcoming development. What if a lot of these folks just up and leave, take the money and run? Would Twitter be a draw? Was it a draw to begin with for you? Is it more of a draw now with Elon Musk? What do you do?
Well, this is by the way, Twitter, not about the First Amendment for Elon. You don't spend $44 billion on the First Amendment. I'm sure that's part of it, but this is big data for him. This is a massive marketing distribution platform that gives him information, which again should feed back into Tesla. At the end of the day, that's what this is about. Obviously, we want to make Twitter a more open place. I think he can do that. To your point, in the short term, if there is a mass exodus, yeah. I mean, as much as it's a technical company, a lot of it sort of runs, the algorithm runs on its own. There's people monitoring and get their hands in there, and they have to obviously take care of certain service items. So that could be a hiccup and a diversion for him. I think long term, it's the right play. Long term, I think you pay a couple bucks for Twitter, and then again you sort of change around the income streams there. But I like it long term. I do think in the short term, though, it's going to pose an issue. And remember, back to Tesla real quick, Ford, GM, all struggling. Mercedes, BMW, Volkswagen, all of these other companies, I shouldn't say struggling, but they're all bringing other competition into the foray, right? So Tesla now has to be at its upper level game. And I think that's what people are concerned with. You've got rising competition. Can Tesla execute with Elon now devoting his time, as we said, to Twitter? That's going to be the toughie. But again, I like Twitter long term. I think it's the right move, and I'm not worried about an exodus per se.
Real quickly, Dave, I got you. The streaming stocks have been the buying stocks for a lot of folks who just realize, the tree can keep going well past the proverbial sky, well into space, and now they're beginning to realize, well, wait a minute, there's a limit to growth potential here, and parceling it out, looking for more advertising, trying to have, a layered, tiered format for customers to keep them coming, might be a sign that, technology investors themselves are seeing and running away from now. Is there something here about technology in general that goes beyond the streaming guys to maybe what we're seeing in general for the group that was priced for perfection and priced for the idea being that these were solid companies, most of the large cap players are? What do you think?
I think there were a lot of layers to that question, Neil.
Yeah,
but let's just I know we're short on time, so let's get at the short ones. I don't think that's universal. I think that the streaming thing, I started my career in the cable television business, and the idea of bundling where you could kind of hide costs for programming is what built the world we have, and the assumption that the CNN guys made that you could pull it apart and still get fully paid and full value for each part of it by consumers was where they got tripped up. I think that Mark Andreessen's software eats the world continues unabated. I think Jared is exactly right about the big data value of Twitter. I think that technology and software will continue to drive our economy and drive the world, but just because the industry is driving the world does not mean that every company in the industry is driving the world and every phenomenon in the industry is driving the world, and investors need to discern between the two or get burned.
Well said. Well said. Guys, I want to thank you both very, very much.